Have you ever heard investment analysts stating it's time to buy and hold for the long term? And if you want to invest in gold or silver or any of those wacky commodities, you need to get an ETF like GLD, SLV. They work very well. Future contracts, another effective way. And I guess if you want to hold the real gold bullion, we have a safety deposit box. That's the type of stuff you would hear from them. And when I talk about buying and holding for the long term, it physically means buying the metal and then thus holding the metal. And in a balanced portfolio, maybe you would do a large combination where some of your investments would be physical gold and silver and platinum, palladium, so on and so on. And some of it would be in stocks and mutual funds and maybe even bonds, assorted different currencies. When you do that, you give yourself a much more balanced position to the point where if a few of those investments go astray, that's fine. The other ones will pick you back up. So if you were to be investing in equities, then that should be part of the balance of other investments. Like I say, real investments included within it. And then within the equities, a balanced portfolio would be some of the trades are for the buy and hold for the long term, or you maybe hope to get a dividend or something, and then maybe you might want to hold over the intermediate term. You see, okay, the market might be bottoming now. I'll get myself some FAS, some triple long financials for a week or two, and then take my 12, 15, 20% profits. That's the way we can trade these days. But that would be a balanced portfolio, of course, to have a bunch of those. And of course, silver and gold. I have this $7,000 poster. It's a classic now. It's been on my videos for about a year now. And I'm not joking when I talk about silver making it to this level. In fact, if you have never searched or never seen a longer term chart of silver, I recommend a Google search, 600-year silver chart, and you will see where silver was. You can see it was almost $1,000 an ounce back in like the 15th, 16th century. And of course, according to that chart, it would be higher because it would say $1998. And even the Bureau of Labor or the Bureau of Government Statistics tells us that the inflation has been up over 30% since 1998. So whatever number you see on the sheet, increase it by 38%. It's a pretty interesting chart, but think about gold and you're investing in the long run. What you are actually doing is getting the metal itself that can be stored, and if need be, you can hold it over many different generations. Heck, maybe it might end up that your great-great-great-great-great-great-great-grandson or granddaughter may end up make a fortune on it someday in the 23rd century. Who knows? But that's the transparency and the durability that gold has. And same thing, of course, with silver. And I myself think, and it's an educated, calculated guess, that silver will be the best post-recovery investment that we have, meaning 10, 20-year investment. A metal in which I think will be very amazing to have in possession for this time frame because, well, the education in me states that, well, what can I say? Silver, lower in quantity, at least the evidence is telling me so. And like I've said, this whole solar panel energy is just a bonus. But the bottom line is, no matter what happens with our dollar currencies, we still have whatever we need in trade. However trade is done, it still works out. So now other kind of ways of buying and holding is within food. And how would you buy food? Would you buy a grains contract on the futures? It could be part of your balanced portfolio. Yes, part of your balanced portfolio. But the interesting thing about the investment in real food is you have an asset that is somewhat durable. And I say somewhat because it depends on the food. You could have canned goods that might last for 3 years or 5 years. So it doesn't have the same shelf life that silver does. If you buy it and you don't use it for 5 years, then it goes in the garbage, then it was a bad losing investment. At least that portion of it would be. But let's look at what happens if, say, there is no food shortage and the economy's fine and you buy a bunch of food. Then you got food that you can eat if you wish, and maybe you can donate it to different charities. And even if you buy food and the inflation isn't coming, but you need to raise capital or raise money, heck, you can go on Kijiji and say, I got so much food, what can you offer me for this? People will buy if you have those assets. So whatever it is you can physically hold and store. And that's why when I look at assets, you say to yourself, what's its shelf life, its durability? Where, personally, if I were to possess this asset, would I store it? You take a look at like toilet paper and diapers and stuff like that. If you buy a bunch of diapers, then if, say, someone within your family or yourself or somebody has a child, then you have the asset that you're going to need. And it's something that works within the barter system, big time. If of course, the consumerism or the stores are working like they always have, they're going to continue selling and everyone's going to be able to buy it, does that mean you're screwed if you hold a bunch of it? Well, you might not make as much on the investment if that's the case, but you'll still be able to get rid of it. Let's say if stores are selling this product you have for 20 a shot, you can get 16, 17, 18. People will save money, and that's why I like the old physical holding strategy. And I mean, something like diapers or toilet paper, you need one big room to hold a few $1,000s worth, or even $1,000 worth of the particular asset. Where something like gold and silver, what's good about that is it's got low inventory, low warehouse space. That's a good factory word. Whatever you have for warehouse space, you don't need as much for it. And it can last. That's why in a diversified plan, I really think food is going to outperform every other asset class in 2010, 2011. And then I think it goes to energy. After that, I think energy will come in. Now, that's just a guess, but when you look at a investment strategy, it's all about a physical inventory of different assets. I like this particular strategy, and this way, if you have a situation where you're going broke, you actually do have assets. You can get liquid if need be. And some people even talk about having different currencies. Well, if you want to hold the euro and the United States dollar and you're an American, this is one of the times you'd be wanting to buy euros because they've been really oversold. And if you have some extra cash, say you got 100K, maybe you buy 20,000 worth of euros. This way, if the American dollar goes through a major declining cycle, then the euros will actually help you with the profit. You can then take those euros that you bought originally for 20,000 and maybe get 28,000 back. And then of course, if your euros at 20,000 are worth 16 or 15,000 because a euro dies and the US dollar survives, okay, then you don't lose as much in your investment. That's all part of a balanced portfolio. It's set up where you have a whole bunch of different things. You do not put all your eggs in one basket, and when one of the baskets leak, you get news that, folks, we got 1 trillion to a power of trillion ounces of silver. It's only worth $5 an ounce. If that rare story comes because we all hear news we don't expect or we're all surprised about, well, In a balanced portfolio, it really won't matter too much. But I still believe it seems pretty obvious to me that it's going to food, energy, and silver. When you look at the 600-year chart, it has been demolished to the downside. Thank you for watching and have yourself a magnificent weekend. Bye-bye, everybody.